Hi, my name is Danny Brown and I'm the CEO of Myriad Real Estate Group, and this is going to be my May market update. Basically what we're seeing is a steady decrease in listing activity. So typically in the springtime we see a rapid growth and a lot of people deciding to sell based on our seasonality, and we really haven't seen that this season. We're seeing a decrease in listing activity by about 25 homes every day come off the market, and there's not enough replacing that inventory. So right now in Maricopa County we're hovering around 9,000 total properties for sale, which is extremely low in terms of where we should be. So to give you context, in a normal market, based on the size of our city, we should have somewhere around 35,000 homes on the market. So right now we're at 9. The all-time low was around 3,500, so we're not very far away from that. And that is causing the market to become much more competitive. So even if demand stays the same, if supply continues to fall, it's going to feel like demand is super high. So we're seeing this inflection point that when mortgage rates get close to 6%, we see an increase in buyer activity. So we see an increase in run-up in purchase applications, so people applying for mortgages, and then we see a lot of buyer activity in the market. So buyers really favor that 6% mortgage rate. When rates go up a little bit, we see buyer demand come down, and when mortgage rates drop, obviously we see buyer demand go up. And so when you've got decreasing inventory and either flat or increasing demand, that drives prices up. We're getting in multiple offer situations again, and the market is just becoming much more competitive for buyers. So when it comes to mortgage rates, it's really tied to the 10-year Treasury rate. And so basically those two, one of my favorite people to follow is Logan Montashami. He says that mortgage rates and the 10-year Treasury are in a slow dance together. So as one shifts, the other shifts with it. So when one goes up, mortgage rates go up. When the 10-year Treasury goes down, mortgage rates come down. And so we saw mortgage rates drop because the 10-year yield came down quite a bit with the banking quote-unquote crisis. It really wasn't a crisis, but the issues that happened within the banking system, we saw the 10-year Treasury come down pretty significantly, so we saw mortgage rates drop. But then everything started to improve, so the 10-year Treasury went back up, so mortgage rates came back up. So it's really interesting to watch how quickly mortgage rates will go up, but how slow it takes them to come back down. So I think that we're going to be in this volatile period of time where we see mortgage rates on a steady downward trend, but there's going to be bounces where they come back up. So by the end of the year, I'm kind of predicting that mortgage rates will settle somewhere in the mid-5s. I think as we get into 2024, we'll probably see mortgage rates with a 4 handle in front of it and maybe settling somewhere in the 4.5 to 5.25 range. And I ultimately think that that's where mortgage rates want to be. We just have to get through all the volatility before we actually reach that point. So what's this going to do to pricing? Well, if you look at what's happened this year, we have seen a steady decline in active listings coming to the market. So again, that supply is steadily dropping day over day, week over week, and month by month. Because of that, demand is staying steady, and that is driving prices up. So when we do have a new listing that hits the market, that is priced accurately, that looks good, it is going to be super competitive. You're going to have multiple parties interested in the home. You're going to have a lot of showings, and you may end up getting multiple offers on the property, which then drives the price up, gives the seller better terms, and has echoes of what happened in 2020 and 2021. So pricing over the near term is definitely going to be pushed up, and we've got evidence of that just showing, again, supply coming down, pricing going up. So what can buyers expect? Well, I think that it's still going to be much easier to buy a home now when there's 9,000 homes on the market than if that number continues its downward slide, which I'm projecting it will, because again, just based on our historical norms for seasonality, we see less listing activity once Phoenix gets into triple digits, which unfortunately is right around the corner. So our season for selling and an increase in inventory is really January through June. So that timeline is running really short. So I'm expecting that we're going to see inventory continue to fall. And if you're looking to buy, it's going to be better to buy now. if you're trying to time it, because it's going to be easier for you to refinance in the future when rates come down, rather than competing with a bunch of buyers all at the same time, right? So like I said, 6% is kind of that inflection point. So as rates get to 6% and even below, we're gonna see way more buyers enter the market, causing a lot more multiple offer situations and just making it hyper competitive. So right now we're kind of in the beginning stages of that. So if you're in the market, it's much better to be a buyer now and pay a slightly higher rate on your mortgage in the short term, and then be able to refinance in the future once you already own your home, rather than competing with everybody else when mortgage rates come down. But again, I would remind all buyers, don't force the situation. You have to work your finances and do things when it makes sense and is right for you. So if your plan was, I need to save, I'm gonna be ready in the fall. I need to save, I'm gonna be ready next spring. Like, don't force it just because of what I'm saying. When the time is right for you, the right home will present itself and it will work out. It's just it just might be a little bit harder. And that's where working with a true professional that can guide you through that and coach you through that process is gonna become invaluable. So what can sellers expect? Well, the market is shifting drastically. We are in a recovery mode, really looking back on at the bottom of the market. I was banging a drum that if you're a buyer, you should buy in November and December. And guess what? I was right. The timing for sellers having to sacrifice and pay a bunch of closing cost assistance for buyers, having to do a bunch of price drops. But this again is if homes are priced accurately and look good. This is not a market where you can list your junk and the home, you just pick a price and you're gonna get multiple offers. We're not there yet. Will we get there? Maybe, I don't know. But where we're at right now is if you're priced competitively, if your home looks good and is presented well, it will sell, and you may end up with multiple offers, again, driving that price up. So I think it's better to price appropriately at the beginning and then potentially get those multiple offers to drive the price up, rather than overpricing it in the beginning. So it's still really important to price your home accurately, but because the pendulum is swinging back in sellers' favors, sellers are having to sacrifice less in terms of closing cost assistance, doing a bunch of repairs during the inspection period. So the market is definitely favoring sellers right now. Again, my name's Danny Brown. I'm the CEO of Myriad Real Estate Group. Thank you for tuning in to my May market update, and we'll see you next time.